Let's see what happens. I don't expect a lot to happen on YouTube tonight, but we'll see, I guess. Hello, everybody. Hope that you're having a good night. What we're going to be doing today is I got the help of the lovely Alexis. Thank goodness I have such an amazing wife. She's going to be helping me run some of this stuff today, and we're going to be looking at some pretty amazing numbers. So we're going to hope, I hope that this isn't reversed. I might have to mirror my camera, you guys, just so that you could see a little bit better. But what we're going to be doing today is working with you guys to try to find what numbers can help you retire a lot faster. So what we're going to be doing is, if you can see right here, we're going to be moving $30,000 into $400,000. How do we 10x your money in the next 2 years as we're going into this downturn? So we're going to be looking at some of this stuff, and hopefully it's going to help you out a lot. I think it's going to be amazing. So first of all, if you guys want to look at any one of our properties, if you live in the Greater Toronto area, we can then start looking at some charts to see where we're going to end up and what price point that you're at right now. So if you want to do that, just give me the first 3 digits of your postal code and we'll start pulling them up. If you look at this right now, this is in Toronto. So this is, this is in Toronto, and M5J is the area code. So you can see that earlier in the year was $888,000 is where we were at. Today, we're sitting at $813,000. As you can see here, it is minus 2% on the year. So M5J has not gone down a lot. Okay, let's check out M4G. We'll pull that up for you. So we'll just clear the search at the top first. Clear the search in the blue tab right down. Yep, you can do that as well. So we're going to look up M4G. I don't have your name, but thank you very much for checking this out. Let's check out M4G, and we'll pull that up and see where you're at for the year. This is really, really important for you guys right now. If you check this out, you're down 43% in the past 12 months. Past 12 months, down 43%. It topped out earlier in the year at 2.2 million. We have a 2.4 million here. Today, it's sitting at $804,000. Now, how do we come to that? That is a big drop. That is way more than the average. So we'd have to dig a little bit more into that. Do you, in M4G, do you have a detached or a condo, and how many bedrooms are you in? This will give us a more precise number for where you're at, so we can be more specific when we're looking at that, because this is going to look at all homes, all townhomes, all condos. So if you want to give me that, we'll dig into it a little bit more. Fun things, what we can do with this as well is we can find out how fast properties are selling. Let's try that out. Let's go to the top here and let's click on days on market. If you check out the days on market, you guys, you can see here that right now it's selling in 8.5 days. That tells you that something's weird, because right now 28.4 is pretty easy. 40 days is the average right now. You're going to sell your 5-bedroom home. So are you 8899? Yes. So M4G, let's look up a 5-bedroom home. It's going to be a detached as well, but it's not going to matter. Detached. Yep. And let's put in a 5-bedroom home. We're going to check out a 5-bedroom, but remember, 5 bedrooms are not common. Let's erase the 5. Let's go to a 4-bedroom, because at least there's 40 units. 40 has sold in the past year. Let's take a look at that. If you look at this one, 28 days on market is how long it's taking for a 4-bedroom or greater home. Let's go back up and let's check what the prices are on those properties. If we pull up that property, you guys, right now, we're down 13% on the year, which is pretty much 15 to 20% down is where we're at so far. Right now, we're sitting at 2.69 million. Sorry, 2.69 million is where you're sitting at properties right now. You saw that the prices drastically changed because what? Because we took out the condos. That's what it is. So for the Edmonton market, Gene, I don't have the digits for the Edmonton market. Edmonton market is also down about 20%. It depends on the type of properties. Higher they are, the farther they're going to fall. Alberta has been insulated a lot more than Ontario and BC. But Edmonton, most of the investors are leaving there because their market is dependent on oil. Since there's this whole ESG movement and this war against oil, a lot of investors have been moving out of Edmonton. Hey, David from Ireland, good to see you. Thanks very much for coming on. Yeah, of course I remember you. Thanks very much for coming on. Good questions, you guys. So anyone on YouTube, if you guys are here and you want to ask anything, you can look this up and I can help you out with something like that. So this is for everyone inside of the greater Toronto area. This is M4G, but it could be anywhere inside of Toronto. So anything that starts with an M, like mother, or anything that starts with an L. So let's go take a look at the next thing. David, I see you over on YouTube as well. That's pretty cool. All right, if you want to go now and let's pull up the, first of all, my website. You guys can always go check out my website right here if you want. Absolutely free consultation, doesn't cost you anything, you guys. This is where you can sell your home for more money, faster, and less hassle than anywhere. This is where you choose your own commission and there's no free cancellations anytime. Hey, I'm going to be applying for a job at real estate agencies soon. Any advice? Well, here's the thing. I just look at the numbers. If you're trying to be a realtor, look at the numbers of anything because the numbers are going to tell you what you got to do. 90% of realtors quit within 3 years, but if you start with a team, 90% of realtors make it. So I would say go work on a team to get your feet under you and understand how the market is behaving and understand that because this is a job that you have to continuously be reading 2-3 hours a day for the rest of your life just to stay abreast with it. So just try to soak up as much information as you can. You just need as much help as you can. You just don't need a place to park your license. All right, so you guys can reach me here. It's free consultation if you're looking to sell your home, if you're trying to do that. All right, now let's go to the Excel spreadsheet. And let's try something out here. Now, this is where you're going to find out how much money it's going to take for you to retire, to quit, and not work anymore. So when you put the purchase price in here and then put how much you can rent it for, then you're going to find out some more information. Let's change some of this stuff. Go to the top and change it to editable instead of default. Yeah. So let's just take this example right here. You have a $500,000 home with $5,000 rent. Right here, you put in your property tax and insurance, etc. But then this is what you're interested in. Can you just move it a bit to the right? Here is your down payment. $100,000 is what you have to pay. You got to get 100 grand out of your pocket. This is the race. How do you get to 100? Sounds tough, but this is what you got to do. But look at right here. This is how much money you make. $1.7 million in 20 years from 100 grand. That's a 17x return. This is what you need to break free and no longer work for the man anymore. So if you guys have a rental property, I want to know, can you give me what the price is of what it's worth today and what you're renting it for? And then let me try to fill out some of this other information for you. How this works is it's going to be showing you a whole bunch of different stuff. This is the cash flow that you have over on this side, but down below, we have a lot of different calculators that are on it. If you have any questions about that, just ask me and I can go over this. This is the debt pay down calculator, 20 years. This right here is capital cost allowance or depreciation in the United States. I have a calculator for both. If you want that, just go to the link in my bio. You can look at this calculator. You need something like this. You also need to know how much the rent is going up by and what the appreciation is. But this is what people are interested in. How do you make 17 times your money? 1,700%. So if you can figure out how to do this, you're going to be okay. What are my thoughts on the Pittsburgh market? I don't know much about the Pittsburgh market. I'm sorry. I wish I could comment on that. In the U.S., the places that I'm most interested in is Florida, Nashville, Georgia. I would say my number one place I'm looking at is Memphis. I love Memphis right now. I'm sorry. So if you guys want to know anything about this on your rentals, just write rentals in the comments below. I'd really appreciate that. If you want to know about getting the prices on your homes, just write Toronto, and I'm going to go back and get you your links for that. This is what we want you to understand is this is right here, your map to freedom. And you can get that in the link in my bio if you want. But this is going to be the work. Understanding how that works is going to be huge for you. Let's go back to the prices in Toronto. Hey, Tony, how are you, buddy? Good to see you. So if you look at Toronto as a whole, let's remove all of the links and just look at Toronto prices as a whole. If you look at Toronto as a whole, this is all condos, all houses all together. Average home prices, you can see that they're down 16.8%. That's a blend. Remember, that is all homes and condos all together, down 16%. It was at 1.2 million earlier in the year was the average home price, and right now it is at $1 million. So it sounds like right around 20%, right? But the blended is 16% if you look at the year over year, but the peak to drop is down 20%. That's what you should be expecting in most of the areas. Now, of course, a condo is different than a house, blah, blah, blah. They're all different. All right. So if you guys want to give me a postal code, I can run one for you, and then we can see if you like that stuff. Do you want to give me a postal code, Tony? I know that you got a bunch of properties going on. You've given me postal codes in the past, but if you have another one you want me to run, I'm happy to do it. But this is important for everybody to know. So what this does is, let's just say that we're going to pull up an individual type of postal code in Toronto. Can we just go and pick one at random? Any postal code, doesn't matter. We'll pull up any single postal code that is out there, and then we're going to start looking at what happens. So this is L4C. This is outside of the main downtown. If you give me, okay, I got one. Louis, how are you, Louis? Let's pull up yours, Louis. We can erase that. Let's try L9Z. L9Z. All right, Louis. So I'm going to do a demonstration for you. Let's pick this up. So all the houses in L9Z, every one of them, they're down 29.7%. Of course. This is a blend between condos and houses and townhouses and detached and everything, right? Down 29% in the past 12 months. If you look at a little bit to the right, the prices were at $912,000. Today, they've dropped because of interest rates down to $641,000. So it really depends if you're in a condo or how many bedrooms. If you want to know specifically, you can also tell me right here, and I can try and find that for you. If you're only looking at detached, you could see where the prices are landing, and they're dropping. This is more than the average. The average in Toronto is about 20%, but there's a lot of properties that we're selling that are negative 30 or 40%. So obviously, this area has been hit harder than most. But again, this is a blend. So this is the average price in the past 12 months, $641,000. We could also change it to the median price, which sometimes changes the numbers a lot. Let's check that out. There you go. $654,000 is the median price. So that tells you that there isn't too many at the outliers. So sometimes a median gives us a better, clearer picture of what's going on. If you want to see what houses have sold in this area, then we can actually pull up a chart about that, and I'll show you another time, I guess. So thank you very much, Sean. I don't have the V's in Vancouver. I'm very sorry about that. The ones I've put together are different ones in Toronto, but I know a lot about the Vancouver market. I study it all the time. Can you tell me, like, are you right downtown, or are you in a condo, or what are you in? All right, let's check out the next one. M4P like Papa. M4P like Papa. G-Sing, for Mosley Crescent, I need you to give me, you want to know a recent price? If you want to know a recent price of a property that has sold, you could just send me a message up here and I'll go pull it up. Send me the exact address and I'm going to send you a link, the message right here once I get it for you, okay? Hey, Sean, you're not just BC, you're Victoria. My family's all from Victoria. Sweet, man. Good to see you. So M4P, let's check this out. This is for A. It's a very long name. Okay, M4P is where you're looking at right now. As you can see, it's down 25% on the year. So that is expected. This is where we have been. It would be more if you measure from the peak. It's measuring from here down 25%. It would be 35% from up here, but a lot. So it is down 1.4 million earlier in the year. And today it's sitting at $758,000. That's almost 50%. So we would have to dig in more to M4P to figure out if you're in a detached property, a townhouse, like what kind of property are you in? All right, Yuri, let's look up L6Y for you. L6Y, and we're going to check that out and see where you're sitting with your property. Anyone have a guess? Usually they're about down 20%. Let's take a look at this one. L6Y, this is for Yuri. Average home prices are down 21% in the past 12 months. They started over here. It peaked out at 1.3 million. Today, it's sitting down here at 1,096,000. So 1.1. That's where you're sitting right now. Again, depends. This is a blend, all condos and houses. If you want some more specific information, you can always reach out to me right here. M9C. M9C. Let's pull that one up, and then we're going to see what we can find on that one. All right. Do we have anybody that's watching us over on YouTube? David from Ireland. How are you, buddy? Thanks very much for coming on. Hopefully you can see the screen okay. This is for M9C for Pasha. Pasha, okay, so you're down 20% year over year. This is the average. This is not anything abnormal. Peaked out almost at 1.1 million right in May, but we know that they started to raise the interest rates earlier in the year. So $1 million right here, and it has slid down. Today it's going for $700,000. So that's the one that is down 20%. That is the average in Toronto right now. November 1 Lima in Guelph. Luke, I don't know if I have that one. I can try it to see N1L. We don't have a ton of information for N1L. Let's check it out. So N1L, I do have some. Great. This is for Luke. You're down 22% on your year. Let's go up a little bit just so that you can see that. See this in the past 12 months, you're down 22%. It peaked out in the spring at 930,000, went up a little bit, and today it's selling for 751,000. Again, this is all condos and all houses. Remember, guys, if you want any help to sell your properties, you can always go over to my other website at sellhigher.ca. It's absolutely free to click a link to sell your property with us. And this is where it's stress-free. You can just put in your name and number, and we'll call you back with any information. This is where you can sell your home for more money, less time, less hassle. It's absolutely free if you want right there. Which region is most percent down? Those are the regions that had the biggest prices. So think of this. The reason why prices are all doing this is because of interest rates. So the people who have the most debt are the ones that are going to be susceptible to it the most. So the higher the home, the more it'll fall. The bigger they are, the harder they'll fall. Remember that. So that's the majority in Canada, Toronto and Victoria and Vancouver, you know, the expensive markets. Those are the ones that are going to hurt the most. Is the market expected to rise? Well, this is a hard thing. What do you mean rise? What do you mean rise? In dollar figure, in nominal figure? Here's the crazy thing. This is 1 ounce of gold. 1 ounce, okay? If you go back 100 years, a home was 20 ounces of gold. Today, the average home is 20 ounces of gold. So has the home price gone up? Not really. But in dollar terms, homes have gone from $2,000 to $500,000 on average. So it's the amount of dollars, but not necessarily the purchasing power, if that makes any sense. So nominally, homes will go up as they continue to print money. Interest rates go down, prices go up. That's correct. 1,000% correct. This is to Luke. Yeah. So here is the rule, guys. 1%. For every 1% that the market goes up in interest rates, if the interest rate goes up 1%, home prices come down 10. And the opposite is true. For every 1% they cut rates, home prices go up by 10. And it happens pretty quickly. But I'll tell you, that the rise, so when they lower interest rates by 1% and people buy, that happens really quickly. But when they raise interest rates by 1%, that loss of 10% in homes happens slowly. Luke, yeah, you're very, very welcome. If you guys get any value from this, please give me a couple likes. Where is it? Down here. Can you like it for me? It really helps me out if it helps you out at all. If you have another postal code for me to have, I'd be happy to take it. Also, if you want me to go through the Excel spreadsheet, you can do that as well. If you have a postal code that you want, just please put out a postal code for me to look up. Number 2, if you want me to look up the Excel spreadsheet, we can run through something like that. Does stock market move relative to real estate? Yeah, they work in tandem. Stock market and housing, they all go up together and they all fall together. Absolutely. When they were printing money, the US or Canada, when they were printing money for 2 years, it was like 96%, 94%, depends on the country. 94 or 96% of all the money ended up in the stock market. So yeah, it moves in tandem. M9A. Okay, let's check out M9A. Mother 9 Alpha. Okay, we'll pull that one up. M9A. We'll view the results, and then let's see where we end up with that one. All right, guys, so M9A, it's up 59% in the past 12 months. So there is some questions that we would have to run because that does not make sense, does it? So if we look all the way at the bottom here, 848, and it bounced around, now it's at 1.3 million. Let's go to the median price and see if that changes anything and be more specific. If it does, it also doesn't help us very much. Plus 20% doesn't seem right, does it? So let's go take a look at the type of properties in that area. So we're going to go over and check out the types of homes in that market. So if we go look out the types of homes in that market, you could see 200 of them are condos. There's very, very few detached, 118, and even less semi-detached and so forth. So we would look at more specifically which one that you're looking at to get a clear idea of that. M9A, if you have an answer for me, you could just type it down what type of property that you're in. So it means if money is printed, it's time to sell. Am I right? Well, not necessarily. As they print money, your assets become worth more. So as they print money, the nominal value of your thing goes up. So this is what I try and tell everyone. 2,000 years ago, a gold bar would buy a suit and a pair of shoes. Today, a gold bar would buy a nice suit and pair of shoes. And when my dad was born, a suit, pair of shoes. So this does not change in purchasing power. All that changes is they keep printing more and more dollars, and they become more and more useless. Detached home. Okay, I'll pull that one up. Detached homes. Let's check that out. So this is still M9A, as you see here, detached properties up 33%. So this, I could already tell you, if we are in detached homes, you see how it was at 2.5 million. Today, it's still selling for 2.5 million. There can't be too many in that price point, but this is obviously an in-demand area that hasn't been hurt very bad by the changes of the interest rates. So we're living in an area where there's high equity in their homes. This is very, very important for you to look at. Now, let's go to Google it, and I'm going to show you where this comes from. So this is for Pasha. If you pull this up, let's go to home sold. And if you go, and we're going to zoom right into your area, okay? Zoom all the way in. As you can see in this area, it'll pull up every single property sold by every single agent from every single brokerage. And it gives you a really good idea of the numbers. And this is how we come down to and figure out all of this data. And it will give us a quick little snapshot that you can see right on the side. 118 units sold, 100% sales to asking ratio. And the average is 29 days to sell it. 2.2 million is the average price. So that is aggregating all of these houses all put together into one. Pretty cool, right? All right. So we just click back to reality of the little blue square on the side. Yeah. If you guys appreciated that, please give me a like. Please consider following me on YouTube. We go into more extended talks on this one. I'm going to be doing a little bit more information. We're going to be doing another live in a few minutes. We just have to set up. But thank you so much for coming by. If you want to come back on the live, I'll be back on here within another 10 minutes, and we'll continue the conversation. Alexis has got to go, and I got to reset up the camera. All right, you guys, I'll talk to you in a few minutes, man. Thank you so much. Wait. Tell me, what's that website? This website? If you want to go to the website right here, it's called sellhigher.ca, sellhigher.ca. This is my ugly mug right here. But you can click right here on free consultation. This is where we teach you how to sell your house for more money, faster, and less hassle. All right, you guys, I wish you the very best. Hope you have a great night. I'll talk to you soon.